For the day, beautiful people, your friend and real estate professional, Joe Corbisiero. I go here by Giuseppe. This is Real Talk with Giuseppe. Got a great guest today. What's
Justin
up?
Home, Roadmap Tax. Good to be here.
Great guy right here. Like we had an amazing talk yesterday to get prepped for today's show, and there's a bunch of stuff we want to talk about. So he thinks right now, you do, that we're gonna go over what we talked yesterday.
All right, that's
so
good. That's good.
Eventually we will.
Eventually.
I want to start with something super cool, which
right.
we didn't talk actually about it. So this is, as you know, guys, I like to spook people. I don't tell them what's going on, and last minute I just show up and I tell them pretty much what we're gonna be talking about, which is gonna be a little different than what we originally agreed to.
Fair enough.
One thing I want to tell you, Jesse. And you seem like such a go-getter. I mean, you told me like 5 kids, you raised it, and then you come from blended family just like
we
me.
didn't have cable back then.
No, well, come on, exactly. You live in Hamu, so I don't think you have cables up there.
Yeah, satellite, yeah.
Just kidding. So, no, we were talking about, personal things, and great guy, really. And I was impressed with the knowledge you have. So we talked about a bunch of stuff yesterday, which we're going to touch. But this is what's coming to my mind. I did a little Facebook Live prior to come here. And you follow social media, right? Are you big on social media or not really?
Nah.
Okay. But
Sorry.
no, it's a good thing. Trust me, it's a good thing. For my line of business, I have to be a lot on social media because, we market homes and whatnot. Plus, I have a team, so I motivate my team members and whatnot. And there's one thing that's been pressuring me.
What?
Okay? Yeah. It's been bothering the crap out of me. Is this. People have tendency now on social media to have, I don't know how to call it, like an alter ego or another personality. A social media personality.
Yeah.
Right?
Yeah. Isn't that called catfishing?
Is that what it's called?
I
know. Is that what it's called? Catfishing.
Part of
All right,
it.
cool. So I learned something good.
Who's that linebacker? The Chargers guy was a victim of catfishing when he was at Notre Dame. Manti Te'o.
Okay.
All right?
Got that.
If you've never met your girlfriend, she might be a dude.
There you go. So catfishing, let's put it like that. So people all of a sudden now it's like, rise and grind and this and do that, this and that, and they motivate this and they do that. But what bothers the crap out of me is that they still do the same things day after day after day after day. They don't push themselves. They don't change something. I believe that we have, and you came a long way because you told me your story.
Yeah.
So it's like, it's about progress, not perfection.
Absolutely. Right.
So if I tell you, or I put a post and say, whatever, rise and grind, and I wake up at 4:30 in the morning, I can say rise and grind because I wake up at 4:30 in the morning. I'm already hustling,
right?
And I told you I'm pushing myself, doing Orange Theory now, doing something different and stuff like that. So it's acceptable. It's something that you want to share with people. But when you're just faking it, putting a bunch of crap out there, and then you're not even working by the end of this month, and I'm referring all the people out there, all my fellows real estate agents, that you come up with all kind of bunch of crap, but you're not even working while I have my kids like you do. You and I were sitting here, we're working. You're going to go back to your office. That's grinding.
Right. So what you're saying, in a nutshell, right, is it's the old saying, you gotta walk the talk.
Yeah, exactly.
Right?
Yeah.
You gotta get after it and do it.
Do you agree?
Absolutely. More to the point, I very, very seldomly post anything on social media. Why? Because I know for my college days I'll get in trouble if I start posting stuff, right? It's better just to use texting and messaging.
Keep it private.
Keep it private, keep it professional, but getting after it. But when I say we, specifically, my favorite thing to do in the world is mentoring my son in sports and life, okay? And to that point, we talk about constantly what success means, right? What successful people do.
Exactly.
And I think a key component of that is successful people do what other people can't, won't, and don't do, right?
They won't do, correct.
Can't do, won't do, don't do, right?
I totally agree with you.
And I learned from Joe Verdi years ago. Joe Verdi's a sales trainer to the auto industry.
Yep.
that it's all about skills, habits, and attitudes. Okay, and those are three things that, from a professional development standpoint, we can constantly improve.
Totally.
And that's what you're talking about, not perfect, but progress.
Yeah, it's about your progress. It's a progression. Like, there's a woman behind the screens right here. She's been doing a lot of personal development work, and it's true.
We're talking about you, young lady.
I'm talking about you. I mean, you make yourself uncomfortable to do things. It's so freaking easy to write a post on Facebook, rise and grind, and do this and this. It's all about work. It's all about this. Show me what you got. Like Cardone.
Right.
Show me the money.
Right.
That's Grant Cardone. You know what I mean?
I want to see results.
Exactly.
But it's interesting too, though. I am such a big believer, Joe, in effort. Because if you show up and you give the effort, the only difference between the effort and the results a lot of time is either time and experience or training. Because think about it, if you're a real estate agent and you make 2 phone calls a day, are you going to be successful?
Not at all. Like one of my agents says, like, I made 18 calls. I'm like, I do that before I actually start working. He's like, what? I'm like, yeah, before I start working, I make 18 phone calls. I make 150 dials a day. Do I love it? No.
Well,
Does it make me better? Yes.
So years ago, I wrote a blog for the then East County Association of Realtors. And I believe that for those of us that are self-employed, there's 3 things we've got to do. And it's prospect, market, and partner for success. If you do those 3 things really well, you can be very successful.
I agree.
Over the years, I've seen my own business transition greatly to the point where now I lead with marketing, and I only work with people that already know me or have heard of me or something. So as opposed to a cold call or it's a blind prospect, rather somebody hears me on the radio or in a public seminar, they've given me their information somehow, some way, requesting more information, and that's permission for me then to talk to them.
To talk to them.
So by really focusing the marketing efforts to give you the types of prospects you want to work with, that's a great force multiplier. Right?
But guess what? I mean, we come from a different line of business. Real estate is not always the same people that we,
Right.
on a yearly basis, but it's very similar. I'm at the point in my career, if I don't like the customer or the client I'm working with, or I don't think it's a good match, I can say, I don't think I'm a good match.
Well,
it's actually great. It's a great feeling.
Yeah,
you know what I mean? It's great. There's some people that don't trust me. You don't work with me. Don't. It's a great. It's a huge investment. You have to trust me or you don't. If I see that it's not happening, then I'd rather not work with you. It's just.
If you think about it, what are the things that are most emotionally important to people? All right, their money.
Yeah.
Their real estate.
You know that because you're a tax planner, so
well,
you know exactly
so the tax planning thing, you would think we actually have more in common from a business standpoint than you think.
Oh,
because whereas I do prepare taxes, that is not at all, on no level, the focus of my business. The focus of my business is helping small business owners and pre-retirees lower their taxes and keep more of their money, right? And we do that through a combination of incorporations and 401ks and all that other fun stuff. But while I was getting my business established, but more than anything, it was about effective marketing and partnering.
Right. So let's dive in, the fun part. So
Great.
You guys out there, you heard the buzz of important changes and tax reforms.
Right.
They're out there. They haven't been approved yet. I did like a post. What was it, 2 weeks ago? I had a Facebook Live telling them a little bit about the rule of the 5 out of 8 years in order to to qualify for the exemption. So we touched it a little bit. So we invited you over because you know a lot about this stuff. And I am very curious about what's going to happen, first of all, with the real estate market.
Right. Well, let's talk about that a little bit. One of the core beliefs we were talking about yesterday is that you invest for cash flow. Mm-hmm. Okay. I think real estate is an absolutely great tool to do that with. To be very candid and very honest, if you are buying a home for the tax write-off, you shouldn't even be buying.
I agree.
Why do you buy real estate? You buy real estate because you got to live somewhere, and you might as well build equity in the property that you're living in, as opposed to making equity for somebody else. That is a reason. Another reason is because real estate investing gives you a solid, tangible asset that you literally can touch as it provides income for you. Right. So to that end, I know that my take on this is greatly different than the National Association of Realtors, but if they completely eliminated the mortgage deduction for personal residences.
So let's explain this better.
Okay.
So the tax reforms they're talking
Right.
about most likely eliminate, right?
They're going to substantially reduce
Right.
the amount of interest you can write off on your
So
primary residence.
they're saying on your primary residence, they're reducing the amount of exemptions for your property tax,
yeah.
apparently,
So
and your mortgage.
Joe, I'm going to try to make it easier to understand.
Right.
Okay, so when you do your taxes, you have a choice to itemize or take a standard deduction. Currently, if you're married, the standard deduction is 12,800, 12,900. Call it $13,000 for easy math. That means if you earn $100,000, 100,000 minus 13,000.
87,000.
87,000, and then minus some exemptions. That's what your taxes are based on. Well, from that approximately $13,000, you then have the choice to itemize. What is that? So literally stating, okay, this is what I'm paying in property taxes, this is what I'm paying in interest, this is what I'm paying to charity, and if all of what you spend is in excess of $13,000, then you take the itemized deduction. Okay, so it's just one or the other.
Right.
Okay.
So you can choose between the two, either 13,000 flat or the itemized deduction.
Now, with most retirees, what have we always told them? Pay off your mortgage. Right? Now you've got reverse mortgages potentially, whatever. Conceptually, if you are not making an interest payment, it's not likely you're going to be able to itemize.
Right.
Okay? One of the key tenets of tax reform is taking that specifically $12,700 deduction and making it $24,000. Who would that benefit? Well, it'd benefit everybody that didn't that wasn't itemizing. That's why the tax industry is up in arms. Oh man, we're going to be out of business because all these returns are going to be simple. Maybe they will, maybe they won't. I guarantee you that if you're self-employed, now's the time more important than ever to get good planning under your belt.
Totally.
But so to that end, how much interest do you have to write off in order to hit $24,000?
So let's run numbers.
Yeah.
So average sales price in San Diego, we're about $525, $530. Let's make it simple, $550.
Okay, $550.
Okay. So let's say you guys out there, you're buying a home for $550. Now, until now, if you bought it before, you've been deducting interest and property tax.
Right.
On your. Do you have an estimate how much would that
Yeah,
be?
well, so doing kind of fast math, 10% would be 55, 5% would be, call it $25,000 of interest.
Okay.
And then add, fast math, another $5,000 in property taxes. You now have a $30,000 write-off.
So far, they've been deducting 30 grand.
Right.
Okay? On a 550,000 purchase.
Right.
Now, let's say this reform passes.
Right.
What's going to happen?
So instead of having to itemize to get 30, showing up to the party, they're going to give you 24,000.
So there's a $6,000 difference.
Okay, 25%. That's going to cost you potentially $1,500 extra in taxes.
Okay.
Okay.
What do you think is? How do you think is going to affect the real estate market?
I don't think it's going to affect it at all.
I don't think at all. Because I mean, if it's your primary residence, you're going to need to rent or have a roof on your head for you and your family, anyways.
Yeah, I mean the big. You had alluded to this earlier, Joe. It's Section 121. That's your 2 out of 5 year exclusion. If you have owned a property a couple years and you're thinking about selling it, I would be, from an urgency standpoint, looking at potentially selling between now and the end of the year. Is there a possibility that they'll grandfather things in 2018? Yeah, maybe.
Yeah, but you're rolling the dice.
But
who knows? I mean, it's one of
we've
these
got a
things.
really hot real estate market right now.
Right.
We've got, prices are I think, at an all-time high. If you're worried about protecting some of your capital gains, I'm good with the idea of selling. Now, there's a couple of asterisks here. And this is something, Joe, that we talked about yesterday, but a lot of people are not aware of.
Right.
Congress has changed the rules twice so far, once in 2004, once in 2009. And what those rules were this. If you own a home, you live there for 2 years, you can protect up to $250,000 per person, up to $500,000. Okay. However, the trick was you buy the house, you rent it out, you 1031 exchange into a different property, and then you move in for 2 years. And then you'd be able to wipe out all those gains. Okay. In 2004, that rule changed where you had to live there at least 5 years if you'd previously done a 1031 exchange. Okay. Again, in 2009, they further changed the rules where now there's something called non-qualified use. Okay. You buy a house in 2010, you live there for 2 years, you rent it out for 3 years. Well, 3 of 5 years, what is that, 60%? That means 60% of your gains are ineligible for the exclusion.
So 60% will be taxable.
Yeah, think about this, Joe. If you had a $250,000 gain, lived there for 2, rented for 3, $150,000 is ineligible for the exclusion. Right? So the best you're going to be able to protect is 100, and it gets worse because then you got to take off depreciation recapture on that. Maybe you've got $85,000 excluded. So what do? Well, you can't do a 1031 exchange on your primary residence.
You could do that, correct.
But you can do a Section 453. Oh, what is that? All right, you've heard it in different names. Right?
Golden nuggets!
All right, you've heard it under different names. We've heard it as seller financing. We've heard it as installment sales. And before you turn off your whatever this is called, Facebook, before you close, let me tap dance and say this. The concept of an installment sale is you only pay tax on what you receive. Okay? There are 2 really glaring reasons why it's not the best thing ever. Number one is default. If you're carrying the paper and the new owner doesn't pay, well, then you got to foreclose and whatever. But the second thing is worse. If you have a huge gain and you do a 10-year note and in year 4, the new owner comes into an inheritance and pays you off,
then you lost all the projected.
Right. So we have a strategy through the estate planning team called a deferred sales trust. Okay, and I've got a website, defercapitalgainstax.com, defercapitalgainstax.com, where you can run illustrations on this. But the concept's really simple, really simple. In an installment sale, Joe, I give you my house. Here, I give you my house.
Take your house.
And you give me income payments.
Okay.
Just that easy. Okay, so long as you don't fault and so long as you don't prepay, I'm good to go. Okay, what if we had a business trust in the middle and I sell the property to the business trust in exchange for the income, and then immediately the trust sold you the house for cash? Guess what? No default, no prepayment, and I still get to benefit from the tax deferral of those gains. Make it even better. What if the note was interest only?
It's even better.
Okay. To put some numbers on this.
Actually, let's put some numbers. Because people have to be visual. It's hard to, to get it when you're. By the way, this is like a golden nugget for you guys watching this video. This is like giving you a little bar of gold sitting there. I see Martin Lopez. Martin, how's it going? This guy's super smart too. He does loans.
Very cool.
Great friend. As a matter of fact, look,
I like that. Section 453,
exactly.
IRC. Thank you, Martin.
So you're basically providing us with a little bar of gold for you guys out there that you have parents that own rental properties. You should probably pay attention even a little more.
Now, a caveat to this, Joe. The more you have, the more you can benefit. That makes sense? I used to always give the example of $1 million gain, because when we add in up to 20% capital gains tax, the new 3.8% Medicare surtax, California taxes, all this stuff, on $1 million gain, you can lose up to $350,000 in taxes. Okay?
That's brutal.
It's brutal. But let's go the other way. Isn't it true? It might not be true. I don't know. What I think is true anyway is that in the San Diego market, properties from 300,000 to 500,000 are hot commodities. Wouldn't you agree?
Big time.
Okay.
Go 100
So,
hotcakes.
right? So let's say you bought a house for 100,000 and it grew to 400,000. That's a $300,000 gain and you sell it. Okay. And by the way, this is a rental property that you're selling.
Right.
That means you're going to lose about $100,000 in taxes on that 300.
So let's recap. Your parents or whoever bought the property for 100,000 back in 1980s.
Yeah.
Now 2017, paid off the mortgage.
Yep. It's free and clear.
The property's worth, let's say four and a quarter. Let's say 400, like you said. Now you have $300,000 capital gain.
Right. And now you're looking at approximately, quick math, about $100,000 in taxes.
$100,000.
Okay. Now, let's think about what would a $400,000 home in San Diego rent for? A couple grand a month, maybe?
It depends if it's single
Right.
family, 2350, 22. Yeah, about right.
Right.
Yeah, let's
So-
say 2,000. Just
So
make
you
it
do
easy.
$2,000 a month of income, and now you're paying for insurance, you're paying for property taxes, you know,
The list
it
goes on
goes
and on.
pretty fast. So that $2,000 gross rent can be anywhere, you know, net $1,500 to as low as $1,250. Okay, and you're always at the mercy of
A tenant paying on
the
time.
tenant.
You don't have to evict them. They don't trash the place. There's nothing major happening to the property and so on.
Joe. If you're ever in a situation where you are tired of toilets, tenants, and trash,
We talked about this yesterday.
toilets
The
and trash,
TTT.
right? Okay, when you're done, just like when you're done with the
Yeah.
job or what else we talked about, when you're done, okay, the strategy that we're talking about will let you sell now and defer the taxes for a while. What do you mean for a while? Well, let's discuss it. In this situation, $300,000, let's say that you have a note rate of 5% from the trust. You're going to wake up to $1,250 a month of mailbox money without worrying about the toilets, tenants, or trash.
Somebody
Okay.
else's responsibility.
Let's say you do a note for 10 years. At the end of the 10 years, what happens? You get to reevaluate the situation. The capital that still's in the trust, you can take it out, pay taxes on it then if you want to, or redo the note and continue it on.
And that's interest only that we're
In this
concerned. scenario,
situation,
which
you-
I
you
think
know,
it's
it works.
you ended up actually making more money, a lot of more
Well,
money.
in an odd way of looking at it, it's kind of like, it's not technically, but it's kind of like getting an interest-free loan from the IRS because you're able to defer that $100,000 in taxes and essentially make an interest return on that.
Right. If I'm based on calculation, you made $1,250 for 10 years, $125,000. Isn't it?
Say that
It's a
one more
little
time.
more. It's about $150,000.
Oh, well, if you're doing 15, in fact, that's $15,000 a year, 10 years, that's an extra 150 grand. Now, yeah, it's taxable interest. Okay, cool.
made
More is-
150
more is
grand.
better. Yeah. Quick tap dance to the real estate agents that are out listening to us today is the 1031 exchange is, in my opinion, the most powerful wealth creation tool in
I agree
real
with
estate. Okay?
But it got a name, though.
Well, yeah, so I mean there's only I guess 3 ways to get out of it, right? If you're doing a 1031 exchange, you can die and get that step up in basis, pass it on to your kids. A lot of people do that. Or you just keep 1031 exchanging indefinitely, or eventually you sell it. The deferred sales trust is exactly the opposite. It is an exit strategy. When you're done, toilets, tenants, and trash, I know you like that, that's what I'm saying. But when you're done, you can utilize the strategy to sell at today's higher prices and exchange that asset for an income stream, which ultimately is not too bad. It's
Right.
not too bad of a deal if you can enjoy the same amount of income you've had without the headaches.
So, hope you guys are following all this. I know it gets a little technical. That's why we're breaking it down with numbers because I think
Yeah.
we all like money. We all like to see what's in our pocket and what we're going to pay for taxes and whatnot. So, moving along with the tax reforms.
Okay.
So, 2 main changes we just mentioned.
So yeah, so the big changes that we're looking at potentially is the great reduction and or elimination of interest deductions and potentially state and local property taxes. I don't think that it's going to have much of an impact on San Diego real estate at all. But your point of the changes to Section 121, 205 years to 5 to 8 years, you know, you would hate to want to sell right now and have to wait another 3 years just because.
That's the only thing personally that scares me a little bit is because we do have a problem. You know, I know 2,000 agents probably been talking about the same thing. It's like we don't have enough inventory, and that might cause even a slower velocity, which
Right.
means is, you know, people are going to hang on the properties a little longer. So that might be. I don't know where we're going to end up.
Here's
anyways.
an interesting thing we haven't talked about that's also related to tax reforms. When the tax brackets go down and you have more disposable income, that then allows you to think to yourself, why am I paying rent if I could be buying?
Totally.
Right? And so there may be a potential for high income earners that are renting to want to, and rather more be able to afford to buy. If that makes any sense. But you know, we're blessed and cursed with San Diego County, where we have an ocean on the one end, a foreign country on the other, and not a lot of room to go north or
Right,
east.
and that's, I mean, it's just availability of properties on the market that could be affecting maybe the marketplace. We don't know.
Yeah.
I mean,
Yeah.
nobody knows. We're just guessing over here.
Yep.
So I think that's the only thing really that scares me the most. I don't think it's going to make it a big impact as far as, you know, deductions on property tax. I mean, we're talking about very low. Going back to the calculation, was the difference, what, $6,000?
Yeah, it was $6,000, and what we haven't talked about is they're looking at eliminating the personal exemption, okay? But and again, just showing up to the party, you're getting about $4,000 per person as an exemption. Well, they're going to replace that, I think, with a credit. A credit for $500 is the same at 25% as a $4,000 deduction, right? That $500 though works a lot better for somebody. Let's see, at the 15% bracket, right? If you're in the lower back, it's giving you more bang for your buck. And in the higher brackets, it's also good because currently they phase out these exemptions after a certain amount of money. So I really think.
So overall, it's even out. I mean, if you're in the $550,000 purchase price, and you know you're gonna.
And I think for most people, you're gonna be better off. As agents, you're gonna be better off. The opportunity to have to pay less federal income taxes, how is that bad?
Totally,
Right?
that never it doesn't hurt.
And the argument that, well, if they get rid of the Obamacare mandate, that somehow it's going to raise health insurance prices. Are you kidding me? Jill, we've gone from a family of 5, 7 people covered, $250 a month. 10 years later, I've got my wife and my son at $700 a month. How is that right? Okay, I don't think it's going to go up much more than that. And
I
think,
agree. I don't think we're going.
You know, if you get some free market enterprise in here, it'd probably go down.
Yeah. So let's answer a couple of. Oh, those guys. I agree, Martin, 100%. Insightful. Thank you, Crystal. Good stuff. They're complimenting you with your stuff. And if we're going to sell, it's time. I agree with you, Jordan. So, I mean, this is something especially one of the questions they ask me all the time is like, should we wait until spring to sell the property, to put it on the market?
Why?
That's the same question. I'm like, why? What are you expecting? Oh, the market is better, it's this and this and that. I'm like, why?
Yeah, I don't agree with that.
Totally.
There's not, the best time to sell is when you're ready to sell.
Exactly.
And I think Jordan said that. If you're going to sell, it's time.
Totally. I mean, there's nothing to wait. What are you waiting for? I mean, seriously, what are you waiting for? That somebody's going to buy with Bitcoin?
Oh my gosh. Did you see that? Hey, did you get one of these?
Oh, no.
This says, we noticed a violation of rules and regulations on your account. We kindly advise you to follow here to verify your account now from BitConnect.
What's that?
Yeah, it's a scam
Why?
thing.
Oh.
Because Bitcoin right now is at an all-time high, but 2 of the crypto exchanges have crashed today.
Oh, really? The Litecoin and
Today.
Bitcoin? Oh, wow.
3 hours ago. Look it up.
So,
My personal professional opinion, Only invest in things you understand.
So we were talking about this yesterday, and it's funny. I said that I threw the Bitcoin in there. So there was articles that we were reading together yesterday. There's people getting mortgage out of their home to invest into Bitcoin.
It's crazy. Why would
What
you
the
do that?
hell are you thinking? So, what are you thinking? You got a home, you can actually touch it. All of a sudden, you take money out to invest into something that, honestly, I asked at least to 20 people, they invest into Bitcoin. I mean, seriously, if you ask anyone, he's like, what is this Bitcoin? I don't know. What the hell are you investing in?
Well, yeah. So in this article, and this is what would you call it? Neutral article,
right.
and it just explains how it goes. Okay, that word mining. So are we going to my ranch in Hamul and digging?
That's what I thought at the beginning when I heard they mine. I'm like, what are they mining underground? What are they mining?
And so
I see your face like, what are they talking about?
Just at that point, it doesn't pass the does it make sense test.
No, but I mean, to me, it's just like whatever, something they made up. Like me, tomorrow morning, you and I, we're gonna make something up.
Yes.
It's like you guys invest. It's $10
I mean, that's
to
like
invest.
the basis of a Ponzi scheme. Am I saying there's a Ponzi scheme? No, I'm not. I'm just saying I don't understand it, and I don't understand why people are getting crazy about it.
I'm making a lot of Bitcoin money, which I don't know. Can he use his Bitcoin money?
I don't know.
I mean, see, there's so many question marks. I'm like, you guys are crazy. If you're
All I
taking money
know
out
is
of your
that-
house to invest into Bitcoin, please, seriously, please sit down with somebody that, like a tax planner or somebody that knows financial.
How do you know a crash is imminent when emotion trumps logic? Okay, when I pulled some things from the 17th century. There was a tulip mania, right? People went crazy over tulips, and they were selling some ridiculous deal.
Sounds like Bitcoin to me.
18th century, you've got the South Sea Company, which is a trading firm, that went crazy. But what about for us? 1929. People were doing the same thing in the stock market. They were taking money out of their house. They were gambling in the market. It went up crazy and it crashed like crazy. The tech bubble of the 1990s.
That's the closest one. Let's talk about the tech bubble. I mean, you were mentioning the same thing yesterday in our meeting. You said people were getting money out to invest into the tech company, well, not, and then what happened?
It just vanished. It's just ether. It didn't have good fundamentals. It was just like back in 2006 to 2008 when money was so cheap and available. How many people thought that they were going to become, real estate investors by buying and flipping? Right. How many of those people just completely got hammered? Okay,
Big time.
And so, as soon as our emotion of greed gets the best of us, it's all over. It's just a matter of time until you lose money. Saving and investing, Joe, are not the same thing. You save money for the future. For those of you that are self-employed. If you put $10,000 in a 401k and you made no return, how much money did you make? That's right, $2,500. What do you mean? Well, if you're in the 25% tax bracket, you get a deduction for putting 10 grand in. You just saved yourself $2,500. It's easy, right? So you need to develop the habit of saving. That's how you can win long term. This Bitcoin stuff, you got to be kidding me. There are people that are going to make money, but I'm not going to be one of them.
Well, everybody can make money in
Bitcoin specifically.
Right. I mean, it's whatever. You're not doing anything.
It's
money
gambling.
and just
not investing.
yeah. It's
I don't like
go
it.
to Vegas, do the same thing. You can make money there too. I mean, what are the odds? So what we talked about yesterday, it's actually investing in the real estate to get to get positive cash flow.
So let's use the easiest example possible. 2006, you buy a house for $500,000 then, okay? And that $500,000 home in 2006, it costs you on a monthly basis $2,500 a month. And from day one, you can rent it for $2,600. Okay, so you've got $100 a month, real money in your pocket.
Those are real numbers, by the way. So you can easily purchase something in San Diego, make $100 a month, and you pay off your mortgage on a monthly basis.
Yeah. So it's just you're going into it positive. You're not going into it not a dollar negative. Okay. That $500,000 property in 2006 becomes a $750,000 property in 2008, and then it becomes a $300,000 property in 2009. Okay. Did you lose? My answer is no.
Never.
okay? Because you specifically are investing for cash flow, and whereas I suppose the actual value of the property matters if you're going to sell it, but if you're going to be a long-term real estate investor, specifically investing for cash flow, it doesn't matter. And now 10 years later, the property value is probably close to $750, and because we're in a housing shortage, your $2,600 a month rent is probably $3,000 a month
Easily
rent.
by then, yeah.
Okay, so now you've got a greater delta of positive cash flow. But Joe, let's go the other way. Okay, you buy the $500,000 property, and it negatively, you're losing $500 a month right out of the get-go, and you're like, well, I'm doing it for tax reasons. That was stupid. Okay, but then it goes up to $750, and you refinance it to $600. Okay,
That's stupid. More stupid than
right. and you've got a pretty cool jet ski and a Hummer. Okay, but now you're $1,000 a month negative, and now it goes down to $300. Guess what? You freak out and you short sale. Okay,
Yeah.
that's
exactly what happened.
We can call that capital gain investing, maybe, but this is really gambling. This is being greedy. Those aren't good fundamentals.
Totally. So, I mean, we ran numbers together. It's great to talk to this guy because it's, he knows it all. And he's very visual, so he likes, as you can see here.
Yeah, I got to draw it.
He likes to draw things. I don't know if you guys can see that. Might be a little too much light. But, here we go. So, but it totally makes sense. To me, I'm all about visual, because we can listen to him for a day because he knows a lot, but when you actually put it on paper and you start looking, look at this, Jess. I'm serious. I'm all about numbers. That's what I really enjoy. I noticed that I have so many clients that I talk to that, like, are we in a bubble? Should I wait to buy? Should I sell? Not to sell? I never seen anyone that bought a house 30 years ago and just kept the same mortgage on a 30-year fix, or 10 years ago, 50, that lost money. Never. The only time you lose money is when you want to do gamble and you want to time the market. That's what you...
From a sports standpoint and a goals standpoint, I have this conversation with my son a lot about short-term circumstances versus long-term objectives. Okay? In his situation, he wants to go to a specific college. Okay? This summer we had the opportunity to go to a football camp there and a wrestling camp there. Okay? Technically, that was because it was an East Coast trip and everything, that was a good $5,000 that in the short term I really didn't need to spend.
It's a good $5,000.
But we've been talking about this since he was about 6 years old, and he's 16 now. And that's our long-term objective. So whatever the short-term circumstances are, sometimes you just got to soldier through it and push through it. Applying that to real estate, okay? If your long-term objective is to have a property that's paid off free and clear, if going into it the rents are positive, net, what does it matter if the value ebbs and flows, right? Your objective...
It doesn't matter. It's true what the market does.
Yeah, it's out of your control.
Right. It doesn't matter. You make an investment on long term. That doesn't matter.
And all of us live day by day, but have long-term goals. Mm-hmm. So it's just in business and everything else, what you do day by day will impact where you are 6 months, a year, 10 years from now. Okay? So as we look at real estate investing, or we look at growing your real estate business, or whatever it is, the more good you do today, the better you'll have tomorrow.
We started this show talking about what do you do on a daily basis if you push yourself, and we ended the show in the same way on a financial. Did you? I mean, we didn't even plan.
Well, that's spooky.
So yeah, it's true. Think about it. I was just listening to you. I'm like, wow, that's weird. So it's for everything. It's for your wealth, for your health. I mean, if you make yourself uncomfortable on a daily basis, and you read, you run, you go to the gym, whatever, you spend more time with your kids, you wake up at 4 instead of 8 because you could do more things in a day. Yeah, it's going to make you a better person, a better father in this case for us, a better head of the family, better worker, whatever you want to say. You're going to be a better person. And if
we
you
can boil it down to work hard, play hard.
Yeah, and the same thing in this, like in the situation. It's easy to pay $1,200 a month and live in an apartment with 1 bedroom, one bath, and have your kids sleeping in the same room. It's easy. A lot of people do that. You know what? It's like, I don't care. I want to keep my bills low. You got to make yourself uncomfortable.
Oh, yeah.
If you make yourself uncomfortable, then you can start seeing these numbers. It might not show in the next 5 months,
Yeah.
5 years, maybe it's in 10 years. Who knows? But you are pushing yourself, your capabilities. You extending yourself to become more of a planner,
Yeah.
to make more money.
Yeah. Well, and it goes back to what are you doing, right? Are you working an 8-hour shift and going home and watching television for 5 hours? You're not going to become wealthy that way, for most people. Okay.
And with that, I would like to wrap up this amazing show. I can't thank you enough because
Thanks,
that was
Joe.
amazing.
All
Seriously,
right.
what you just said at the end, that's it. It's like, we started on a certain way and
Sounds
we
good.
ended it like
Sounds
that.
good.
Thank you so much, all of you, for watching. He's going to type in his information over here. As you can tell, he knows a lot.
Well, hey, Joe, all the things we talked about today, I'll send you articles on that. If people
Beautiful.
contact you,
We
you
can
get 'em
put
up.
it actually on the Facebook Live as well, so
right.
people that can look at it as well, and
Yeah.
that would be awesome. So
We'll do.
thank you, all of you, for watching. And if you have any questions, after you watch the video, feel free to type it in. You can answer, I can answer, and this is what we do this, to inform you. This is a Real Talk with Giuseppe, Real Talk San Diego. This is Jesse, this is Joe. Talk to you soon.
All right, bye now.
Thanks.
All right, good job.